It's day three, a wonderful day to all our distinguished guests and participants from all over the world. My name is Karen Bazan, and once again, I am honored to be hosting the event for today. It is my pleasure to welcome you all to the third day of the largest virtual edition of the International Property Show, the Middle East's biggest property sales platform for local and international real estate markets. In partnership with Invest in Dubai Real Estate, the renowned real estate promotion initiative by the Dubai Land Department. Today, I'm excited to present to you our activity, the training session and valuation in real estate. This course offers an introduction to the concept and methods of real estate valuation, factors affecting the value of the property, types of real estate and report criteria, real estate appraiser, review of the property market, and evaluation of methods and approach. Our speaker is a senior real estate professional with more than 25 years experience in the Middle East and North Africa, focusing on market research, highest and best use, feasibility studies, valuation development appraisal, strategic advisory, and asset acquisitions. She is a real estate valuation and investment trainer at the Dubai Real Estate Institute. Let us all welcome Ms. Noura Yazin. Ms. Noura?
Thank you very much, Karen. A very good morning to all of you. If you allow me to share my screen, just a second. Yeah, and we're on. Okay. Perfect. All right. Good morning, everyone, and I hope you're having a lovely Friday morning. My name is Noura Yazin, and I'm gonna talk to you today about real estate valuation and investment. I'm a real estate professional with more than 25 years experience in valuation, development appraisal, feasibility study, market research, and also I work closely with Dubai Real Estate Institute. As you may know, in Dubai Real Estate Institute, we offer a number of courses that meets the requirement and expectation of different candidates with different backgrounds, whether they are interested in real estate as a professional or experienced individuals. My main expertise, as I mentioned, it's in valuation and development appraisal, and I'm gonna give you a snapshot of the importance of real estate valuation and why we offer this course at the Dubai Real Estate Institute. Real estate, I mean, we mentioned that real estate is the cornerstone of the real estate industry. And if I think of it is actually any agent, broker, investor, developer, the first thing would want to know what is the value of an asset, whether he wants to develop that asset, whether he wants to purchase or sell it. It's always about asking about the price and the value and the cost of the real estate assets. And that's why we say that it's the cornerstone of the real estate industry. It's a professional practice that is concerned with estimation of the value of a real estate, and that real estate could be land, building, under development asset, or a project that's ongoing. I always say, and it's a common thing we know about it, it's the valuation is an art as well as science. The reason we say it's a science because it depends on methods and approaches that we use as valuers, but also it's the art, and the art about it is how the valuer can justify the assumptions. He's sharing his knowledge and experience in the real estate sector. I'm going to touch base on it in my later slides, why it is an art, and it's not like 1 + 1 = 2. It could be 1 + 1 = 3, and there is a reason for it. The reason is that we look not on the quantitative aspect of real estate asset, but also on the qualitative states. So how much you put value on that qualitative aspect of any real estate asset. And again, we're all governed by laws and regulations that are internationally recognized, and also Dubai Land Department has governed and has abided by those, or they adopted those guidelines. If I want to know what is a valuation, I'm not going to go into the technical of it, but the valuation is basically when we buy something, we're basically assessing the value, the worth of it, and the worth of it is the future benefit. Why am I actually owning this asset? What are the associated risks? How can I evaluate that risk? And therefore, when I look at it, it's not, as I mentioned, it's like I look at the rental income, for example, or the cost to complete, but there are aspects that, or uh, uh, aspects that I use to value my assets. Part of it is the utility, the demand, the cycle, the transaction, the supply. So if I think about, again, the elements that determine the value of anything, whether real estate or non-real estate assets, is like the capability to satisfy my needs, my future needs, why I want to actually have this asset, what's it's going to add to me financially, and also from a psychic perspective, the demand of it. Is there a really demand for it? How can I project that demand? What if the market changes happen? How I can evaluate that risk? The ease of transferring the ownership. What am I owning? What are my rights? What can I do with this real estate assets? What I can't do it? And also there is the scarcity. And as we know, the land is scarce. There is a scarcity. It doesn't, there is the finite supply of a similar properties. And all of these aspects and elements, they determine the real estate valuation. And part of the real estate valuer's job is to estimate rather than determine the value. So it's what's the estimation, what is his opinion, the objective opinion of a real estate value. The beauty also, why we say that the valuation is an art, is that because it depends on not only information related to the real estate property that I'm looking at. I need to be fully aware on the official information, what's happening in the market. I need to be aware of technical information related to this property and the surrounding of that property. What are the financials information that this property is going to generate for me? What is my future income, for example? Is there an appreciation in the value? Is there any costs I need to be aware of? Is there any risk that I need to assess, and how I'm going to assess that risk in my valuation? Market information in terms of what's happening in the market, not only locally, but also globally. So I need to look at the demand, the supply, how the demography areas has changed, for example. What is the freehold versus non-freehold areas? Why would an investor or developers look at that area versus the other one? What are the segments of the real estate market in terms of, for example, residential market, the commercial market, the retail market, industrial market, and how the demand and supply within those markets, they do change and shift over time, as well as being connected to other real estate professionals, the likes of the developers, the contractors, the agents, the lawyers. All of these, the valuer has to be very well established in the market to be able to get the information and rely on reliable information to do the valuation and to estimate the value of the land or the asset or the property. The conditions for a practice of real estate valuation is I look at the economy, as I mentioned. I look at the laws, the regulations, the government that applies in the real estate, and they change for a reason, to make it more transparent and easier for the developer and investor, and also to enhance the trust in the real estate market. How is the urban planning going to affect my valuation? How do I collect the information? What are the condition of that real estate asset? And the valuer is not required to know everything, but at least if there's something that he should know, he should have the tools to get that information, and he should know how to collect that information and analyze it to use it in the valuation. That's why we keep saying valuation is an art. It's not, as I mentioned, you rely just on the financial information of the asset. You need to look at the surrounding area. You need to look at the location. There is the systematic and the unsystematic risk that we need to touch base on in the valuation. There are tools that help us to do the valuation, but what's important and the art of it is how to justify those assumptions that you have relied on, and how to use your objective opinion to provide an estimation for the real estate valuation. When I talk about valuation methods in my course that I delivered at Dubai Real Estate Institute. We touch base on, we go into details, I mean, in terms of the methods of the valuation. And the methods of the valuation, we look at the market approach. The market approach simply is, I'm looking at the comparable approach. If I have this asset or this land has been sold for X, is it really comparable to my asset? So as we know that the asset doesn't, I mean, the asset, there is no asset similar to it 100%. So what are the adjustments I have to make to provide or to estimate the value of the asset? So I look at adjustments, whether it's a negative adjustment or a positive adjustment, what we call it a premium or a discount. And again, this is the art, is like how I put my pros and cons, the similarity and the non-similarity of my asset versus the other comparables that I look at. We also discuss and we introduce the income approach. The income approach is that the investment method or the profits method, and this means I look at my asset as an investment. What are the return on income and also the return of income that I'm going to get from this asset? If an asset generates an income, how do I capitalize that income? What cost, again, in terms of running costs, operating costs, or service charges I need to deduct? What is a reasonable yield? What does yield mean, or cap rate? We have the traditional methods and the contemporary methods, whether it's the traditional methods, as I mentioned, is the investment method, and the contemporary one is the discounted cash flow. What are the similarities and dissimilarities between those two methods? Why some valuers prefer using them versus others will use different methods? And how at the end we get to the same, almost the same results. So again, we look at the income method of any asset that generates an income. We also discuss and we talk about the cost approach, and the cost approach is basically, if I have an asset that's under construction, how do I value it? How do I estimate the future income of it? Is there a development risk, which is the construction risk? What are the developers' target returns they look at in the market, and how do I calculate it? How do also I take into consideration the time value of money? What are the performance measurements for a developer? We look at developers' the profit on cost, or on the gross development value, or the project internal rate of return. All of these things we discuss and we give an introduction on the valuation. And it is very important, again, whether it's a developer or an investor, or even an experienced valuer or a professional in the real estate market, to know about the approaches, because as I mentioned about valuation approaches, because everything is about value and cost and price. We also look at the cost approach. When do we use it? Why certain, for example, entities rely on the cost approaches? And some of them they don't. So again, all of these things that we discuss in the course, and we go into details, and we give examples on how we value different type of properties. The course that I give, it provides a practical and theoretical aspect. It relates to real estate valuation. We touch base also, we talk about the characteristic of real estate market. How is it different from the financial market or the bond market? This course, not only anyone does valuation can take this course. I have a lot of candidates, they come from a different background, whether they're valuers or property managers, or portfolio managers, or agents, contractors as well, investors, developers, even from a financial background, the likes of the bank and government and official and regulators. And the reason why, because as I mentioned, it does give a hint about the real estate valuation. How does it impact our decision? How can I make an informed decision? The course doesn't, it allows the reader of a real estate valuation reports what does he expect from that valuation reports, and how he can use the information that is there to make an informed decision. When I look at the course context, we talk about understanding the real estate market, as I mentioned, the characteristic of the real estate market, the risks in the real estate market, and how I can measure those risks, whether they're qualitative or quantitative risk. why we have evaluation reports, who rely on it, why does the bank ask for evaluation reports, or why, for example, if I want to buy an asset, why would I do evaluation? Listed companies, again, why do they instruct real estate companies to undertake evaluation of their assets and the importance of it? It is one of the fundamentals in the real estate market as well in the economy. The valuation process from when we receive an instruction on to do evaluation until we submit the report, we talk about those processes, as well as we talk about the different methods and approaches in the evaluation report. We also touch base on the real estate valuers, the ethics that he had to abide with, the role of Dubai Real Estate Institute, the role of Dubai Land Department, and how they put all those guidelines for us to facilitate our work and to make the market much more transferable and to increase as well the trust of the investors, developers, or any participant or whoever is interested in the real estate market, how he can increase that trust and make an informed decision. And I hope that I've given you a snapshot on the real estate valuation, and I look forward to welcoming you in Dubai Real Estate Institute and see you there. And as I mentioned, we do offer a number of courses that meet different backgrounds and different needs. Thank you very much. And I think the floor now is open for Q&A.
Yes, thank you so much, Ms. Nora, for that very insightful, very informative presentation as well. And yes, we have actually loads of questions. Okay. Let's see what's the first questions that we have. Yeah, okay, to start with, what are the key factors that determine the value of a property in Dubai?
There are a number of factors, and I wouldn't say key, there are a number of factors. The first thing I've been asked, what makes a valuer a good valuer? I always say knowing the market. You should know the market. What determines the factor, the estimation of the value of a real estate asset, there are a number of factors. Some of them are related to the asset itself, the likes of the location, the condition of the building, the income that generates, the operation cost, these factors, and also there is the wider factors that affect any kind of investments, which is, for example, the economy, the government laws, employment, inflation, interest rates. So there are factors that impact any kind of investment and also the ones related to the real estate assets. So we talk about, as I mentioned, unemployment, we talk about interest rates. We have to take into consideration the demand, the supply of the market, as well as those factors that relate to the property itself, the location, accessibility, the quality of the tenant, the security of that rental income, the duration of that rent, the condition of under construction property, what am I building? So these are the factors that affect or impact the real estate value.
Yeah, so really just enough knowledge about the market. And second questions, moving, how long is a property valuation valid for?
The valuation real estate report is valid for the same as of that date. And the reason why we don't say for the next 1 year or 6 months, it is valid for the valuation as of the valuation date. And the reason why, because nobody can predict the market. And I always give the example of what happened globally. In 2008, between few months, the real estate market has shifted. So as long as the real estate market is stable, you can use that valuation report. But if there is any disturbance or any disruptor in the real estate market that does impact the valuation, then even within a matter of weeks, if there is something happen, then we have to update the valuation report. So it depends. Right. As long as the market is stable, the value should not change. But as soon as there is, like, for example, the COVID-19 has, I mean, like this year should be similar to last year, but because of COVID-19, there is that disruptor, that disturbance. So this means it impacted the real estate real estate assets, and therefore we need to update our valuation reports. So it depends on the stability of the market.
And you're always ready for any unpredictable things to happen.
Yes.
Yeah. To our next question, in Dubai, what key improvements contributes largely to the value of a property?
Sorry, what key?
Key improvements.
There are
Like
a
what
number
key
of
improvements?
initiatives
Yeah.
the government has taken, and part of it is also the laws and regulations that help to increase that transparency in the market. Uh, if you realize the government has also taken initiatives and implemented those in terms of, for example, having an escrow account. Previously, before 2008, we used to pay directly to the developers our installment. Now we have an escrow account. There is a number of initiatives, like the government says to the bank, if you want to give a loan, for example, you need to rely on a real estate company that provides valuation, and they're authorized to do valuation. Part of, for example, real estate, as a valuer, I have to be certified by Dubai Land Department. I have to take a course to do the real estate, to become a licensed real estate valuer within Dubai. So these are the initiatives that the government has taken. Also, what they have taken, they have been very transparent in terms of the transactions that's happening in Dubai. If you realize, they always announce it. It is on the website on a daily basis, and also on a weekly basis, there is those announcements to increase that transparency in the Dubai real estate market.
That's a good thing actually here in Dubai, the transparency. Yes. Moving to our fifth question. In
Yeah.
terms of the markets, has the value of properties substantially increased or decreased? In terms of the markets.
Current market, it differs, and I mean, the market has changed, but if I look at it, in certain uses it has increased, and in other uses has decreased. The reason why I'm saying this, for example, if I look at the residential markets, for example, despite that the rent has fallen, but what has happened, a lot of people has upgraded in the quality what they're living for. And because of the COVID-19, people have shifted from renting an apartment to renting a bigger space where they can have an office, for example, in their own home. Commercial spaces, again, the way companies, they shifted the way they look at the commercial spaces. Do I really need that big space to have all my employees working from the office, or I can implement something like working from home versus working from office? So some companies, what they have done, they have taken initiatives in like giving the option to the employee, you can work a few days at work from home and few days from the office. So, and again, that doesn't mean I have to reduce the size of my commercial spaces, because now with the distancing, social distancing, I have to maintain the 2 meters between me and my colleague. So again, the way we think about real estate market has changed. The logistics places, because the demand on it has increased, and the reason why, because now a lot of us, we start ordering online. So there was a heavy rush on ordering online. So this means I have to have bigger warehouses. So in certain areas it decreased, and in other areas it has increased.
So it's just really based on the way each person, thinks. Yeah. What does the owner do if they feel their property has been under evaluated?
If the owner has feel that their property has undervalued, they have to challenge the valuer. I mean, part of our work is also educating the client, and the client should educate us. Maybe there's something that I have missed, or he hasn't told me about it, and I underestimated it. So before we issue the valuation report, we always discuss it with the client, and I always say that the valuation is not a number, it's an opinion. And that opinion varies between one valuer to another, but it shouldn't vary dramatically. So if a client believes that a valuer has underestimated the value of his property, this is where there should be a discussion between the client and the valuer to see what has been missed.
So it's really education, proper educations, and yeah. Moving on, is property rentals of Dubai government by valuation? Is property rentals in Dubai government governed by valuations?
I don't understand the question.
Let me recheck. I think we have to read. Is property rentals in Dubai governed by valuations? Oh, I think it's the
no, rental rates are not governed by valuation. Rental rates are governed by governed by demand and supply. Obviously, if there is an increase in demand, then the prices and the rents will increase. If there is a decrease in demand, the prices and the rent will decrease. So it's governed by the demand and supply in the market, how much there is a demand from it, from occupiers, from investors, and also how much there is from that demand is available. And that's why with the scarcity, comes into play.
Demand and supply. We still have enough time, I guess.
Yeah.
We can ask more questions.
Yeah.
Are home loans issued based on the evaluation of the property alone or market prices in specific areas as well, or a combination of both?
Loans are when banks give you a loan or a mortgage facilitator gives you a loan, he would request a valuation report, and they normally have a number of valuers that they deal with, and the valuer when they do a valuation report, they depend on the market. So whether you're telling me it's from the valuation report or from the price in the market, their valuer will rely on the price of the number of transactions that happened in the market. So there shouldn't be any that discrepancy between the valuer's opinion and what's happening in the market. It is both, actually, because the valuer will use the market transaction, the prices, to evaluate the subject property.
So it's a balanced combination of both. Yes. Yeah. When you value a mixed asset property, what is the methodology and process you use to ensure you have achieved optimal results?
When you look at the valuation of any assets, I look at the basis of the valuation and the purpose of the valuation. Normally what happens is that the asset itself leads us to what valuation report, or sorry, what valuation approach I should be using. For example, if I have a mixed use development that has residential and a hotel and commercial, the hotel, normally we do a DCF or the profit method or the discounted cash flow, while the residential, if it's for sale, I would be using the sales approach, but if it's for rent, then I will be using the investment approach. So the asset itself, again, leads itself to the right approach, and also the basis of the valuation. Why am I doing this valuation? Is it for financial purposes, for example? Is it, for example, if it's for insurance purposes, then the method will change. If it's for mortgage purposes, again, the method will change. But normally we have standards, we have techniques that we use, and I do say that what determines the approach is basically the basis of the valuation, and the purpose of the valuation. Why am I doing this valuation, and what basis am I doing the valuation based on? Is it the market value, which is the commonly used? Is it the fair value? Is it the investment worth?
That's
so it
very
depends
clear
on the purpose and the type of asset.
Yeah, that's very clear, actually. We have two more questions on the line. In your expert opinion, what do you feel evaluations will do post-COVID? How has evaluations been during and pre-COVID as well?
Okay, the COVID-19 is an interesting year for us, and it also shifted the way even our clients, they look at the valuation report. If you realize before, it was they were not really heavily involved in maybe in real estate valuation or in the real estate. So during COVID-19, what has happened it allowed developers, investors actually to dig deep in their portfolio and assess where is my risk, and how I can evaluate that risk and how I can shift that risk. For example, like retail, for instance, we during the lockdown, it did impact the P&L, the profit and loss of the asset itself. But then how can I shift that? A lot of people have moved, or retailers have moved to the online, for example, shopping. So during COVID-19, what has happened, people start to be creative, is like, I need to maximize the value of my asset. And to maximize the value of my asset is like looking at what are the opportunities I have. I always believe in any turbulence days, there is always an opportunity. And we have looked at real estate market during COVID-19 as an opportunity. A lot of people have cleaned up their portfolio, have reassessed their portfolio, okay, fine, let's look at it from a different angle. And that's what happened. It's very difficult to say that the impact of the COVID-19 will be X, because we are now in a qualitative time, and the quantitative time will come at a later stage, which is the end of the year or maybe next year. But again, I always believe in now in such days, there is always an opportunity to grow and to see, okay, where do I need to focus my energy and attention on, and to maximize the value of it.
Actually, it's just more on looking into the positive sides, and there's a lot of creativity happening right now and during the pandemic. Yes, so I think it's a good sign for others. Yes.
Yeah.
We have our last question. How much you think buying and flipping, in terms of property renovations, old property can compete
Sorry, Karen,
with
you
the
cut off. Can you
similar?
repeat? Sorry, Karen,
Yes,
you cut it off. Yeah.
yeah. How much you think buying and flipping property renovation, old property can compete with the similar property in the neighborhood? And how do you think that can be used to offer better and higher price?
Yeah. First of all, when somebody buys a real estate asset, the flipping concept, we don't like it, the flipping, because when we look at long term, and if somebody wants to buy an asset that requires renovation, that's one of the things that we look at it from an investment point of view, and it's easier that you renovate an asset and look at it as a long-term investment. And how does it help is what upgrade you're doing to that building. So when I do a renovation, I need to study the market. I need to say what are my competitive doing and how I can actually offer similar or even better. So what is lacking from other developments and how I can bring that deficiency in my assets. And this is where the renovation comes into play. Yes, I am restricted by, for example, maybe the layout, maybe the facade of it, maybe the construction of it, but then I need to really study the real estate market. I need to know who are my competitors and how I can offer similar, if not better, quality assets.
So it's really proper study and observations about everything in the market. I guess our time is up, Ms. Nura. So it's really, really thankful, and I'm so honored to have you
I
in
want
this
to thank
presentation.
I want to thank all of you. And again,
Yes.
I do encourage all the participants to go to Dubai Real Estate Institute website, which is www.drei.gov.ae. There are a number of courses, whether it's in valuation, investment, in brokerage, in certified property managers, that they can benefit from. I have taken those courses, although it's not my line of business, for example, but they do add a lot, and it helps all the participants and the candidates to understand the fundamentals of real estate market.
And actually, this is a wonderful Friday, Ms. Nura, because Friday and we are learning, and it's additional knowledge for everyone.
Right
And
now, it's the best
yeah.
time. I always say, right now is the best time to educate and invest in ourselves.
Yes, yes, that exactly.
Thank you very much,
Lily.
and have a good Friday.
Yes, thank you. And thank you
Thank you.
all so much to all our participants also for joining us in our training session. And there are still tons of activities waiting for you tomorrow. And you can still register for free to join the largest virtual event in the real estate industry, the Invest in Dubai Real Estate, in partnership with International Property. And please visit also our website, www.internationalpropertyshow.ae and www.iadubai.ae for more information on our upcoming activities, and follow us on our social media channels to keep updated. And hope to see you all tomorrow on the fourth day. Once again, thank you, Ms. Tura. Have a
Thank
great
you very
day. Enjoy
much,
your
and
Friday.
have a good day. Bye-bye.
Bye.